You are deciding which health insurance to purchase either through healthinsurance.gov or with your employer, and you would like to know how much it's going to cost. If only it were that easy. Hello, YouTube. I'm Jay with 407 Benefit Specialists, and I'm going to help you demystify some of the more common terms in the world of health insurance. There are four main terms you need to know: premiums, deductibles, copays, and out-of-pocket maximums. It sounds complicated, but hang in there with me. I promise it's not as complicated as it seems when you get into it. Let's start with premiums. Think of premiums like a club membership or a Netflix subscription. You pay the same amount every month to be a member. If you're joining a health insurance plan with an employer, premiums are sometimes called the employee contribution. With the premium you pay every month that either comes out of your paycheck or you pay directly to a health insurer, you get some things for free, like some preventative care that would include wellness visits, vaccines, and screening for diseases like breast cancer, cholesterol, and diabetes. This care is covered by your premium. The second term we need to talk about for you to understand the true costs of medical insurance is the deductible. A deductible is the money you have to pay for your care before the insurance company will pay anything towards your medical expenses. Different plans will have different deductible amounts, and until that deductible is paid, the insurance company will not cost share with you. The premium of a plan is sometimes determined by how much the deductible is. Once your deductible is met, then the insurance company will begin sharing the costs with you, or co-paying the costs. A copay is exactly like it sounds. You pay and the health insurance pays together. What determines that amount or that ratio is determined by the specifications of your plan. Sometimes a copay is a specific dollar amount, and sometimes a copay is a percentage. Copays with specific dollar amounts are more typical for office visits, whilst percentages are more common for specific procedures. For the first example, you need to go to a podiatrist for a consultation. The cost of that consultation is $200 in total. That specialist office will usually ask you for your copay or your share of the cost of that visit right up front, which in this case is $40. The remainder of the cost, or the insurance company's share, which is $160, will be billed directly to the insurance company by that specialist office. For something like a surgery or other medical procedure, the copay is usually paid as a percentage. If, for example, you have a 20% copay on a surgery, then your share of a $1,000 procedure will be $200, and the plan will pick up the other 80%, or $800. Copays don't go on forever. When someone has a catastrophic event such as a heart attack, the cost of the medical care can sometimes go into the hundreds of thousands of dollars. Even if you're only copaying 30% of that care, the cost to the member would be more than most Americans could afford, which is where the out-of-pocket maximum comes in. That amount is the most a member of a health insurance plan can expect to pay on an annual basis, and the insurance company is required by law to pay the rest. So if your heart attack were to cost $300,000, the most one could expect to pay is that out-of-pocket maximum. So, to sum things up, premiums are what you pay to be part of a health insurance plan. The deductible is the first amount of money you will pay towards a health plan at 100%. Once you meet the deductible or pay the deductible in full, your insurance will begin copaying the cost of your medical expenses. You will keep paying until you hit your out-of-pocket maximum, and then your insurance company is required to pay the rest over that amount. Some tips. Ask your insurance or human resources for the SPD, or the summary plan description. The summary plan description is a document that is going to list the copays for some common procedures, so you can get a general idea of the true cost of your plan. And you can look at what you paid for medical last year and apply that to those ratios. There is more to the cost of a medical plan than the premium or what comes out of your paycheck. If you pick the wrong insurance plan just because it looks cheap up front or has a low cost of money coming out of your paycheck, It can cost you big by year's end, especially if you have a catastrophic health event and you have the wrong insurance. Shop around. You may have a convenient location through your employer, but also check the markets if they're available to you in your state or the federal exchanges for a potentially better plan. Finally, email me, Jay, at 407 Benefits Specialist for answers to your questions for free. Also available is an affordable analysis and recommendation for picking the right plan for you. We don't sell insurance, just our time.